Being great at sales is essential to your business and your career, but you and I both know that the stress of selling and dealing with constant rejection can be an emotional drain. My entire brand, No BS Selling, is based on the belief that professional sales is a skill and not a personality, and that to be better at sales takes constant refinement and a dedication to your craft. This show is for salespeople and entrepreneurs who are committed to improving their sales skills and getting better results, and are sick and tired of the BS game that often happens between buyers and sellers. Welcome to the No BS Sales Podcast, and I'm your host, Walker McKay. I'll help you and your sales team make selling easier, feel less cheesy, and be more lucrative. It's time to change the rules and level the playing field between you and the people you sell to. You're already good, let's be better. No BS Sales Team, today I've got a great guest, and I can't wait to introduce him to you. His name is Alex Chasovsky, and he is an economist. Now, you're probably rolling your eyes going, what the hell are you doing having an economist on your show? And a couple of things. Number one, Alex is probably the first economist I've ever talked to who's like a real human being. And the secret, he says, is he's not really an economist. I'll have him explain that in just a minute. But he's here to talk to us about what are some key metrics in your business that you need to follow so that you can know when to invest and when you need to pull back, so you can see the economy of your own business. So Alex Chasovsky works for a company called ITR Economics. He is a speaker and senior business advisor. He is an analyst in things like macroeconomics, industrial manufacturing, automation, advanced technology trends. He has been on All Things Considered, BBC, and the Wall Street Journal, and it is an honor to have Alex on the show today. Thank you so much for being with us, my friend.
My pleasure, Walker. Thanks for having me.
Take 2 minutes and tell us how you got to be an economist at ITR, which is a very special firm. They're the only group that talks about economic change, economic things, that actually talks like real human beings. How'd you get to be a part of that? What's your story?
So the long version is I grew up in Kiev, Ukraine, when it was still part of the Soviet Union. My family and I emigrated to the United States in the early 1990s. So we were refugees for a while, lived in Austria for a year, in Italy for about a year. And then finally, the great country of the United States of America opened its doors and welcomed us in. So in May of 1990, I came to America and I fell in love with capitalism as soon as I set my feet on the ground in Dallas, Texas. I got to tell you, it is an amazing thing. And to me, coming from the Soviet Union, from a communist country, this idea that there is nothing holding you back except your work ethic, your determination, and your willingness to go beyond your peers and do the things that other people aren't willing or able to do, that to me is phenomenal. And I still believe to this day that despite the very real challenges we face, despite the division in our community, that the United States is by far the best country in the world and truly is the land of opportunity. Because if you work at it, if you commit yourself, and if you really, strive for the stars, you can achieve amazing things here that you can't achieve simply anywhere else around the world. So the love affair with capitalism certainly was a big driver for me. My background in education is actually not in economics. I have an international business degree from the University of Texas at Austin. I went to Texas State, the cheaper, smaller version of Texas, to get my MBA. And I've worked in a lot of different professions. I was a commercial teller at Bank of America. I worked in sales at Dell for a couple of years, marketing in a communications company, and provided a lot of high-end consulting services for public organizations, companies, that really provide a lot of different types of information. So the reason I'm here as an economist at ITR is because, as you said, ITR is unique. We are the only firm that actually tries to connect the dots between what is going on in the economy and in the various markets and help business leaders and decision makers use that information practically and turn it into actionable advice that they can implement in their own business. So that's why I'm here to talk to your audience today.
And that's what we're all about here, right? Is having our guests that share actionable information with the No BS sales team so that we can put this stuff to use and make better with our businesses and ourselves. So one of the things you and I talked about beforehand was that you talk to business owners a lot about the key metrics that they need to be watching to determine when to invest and maybe when to pull back. Do you mind taking a minute and talking about that?
Yeah, absolutely. So I think the context for this conversation has to be in the sense that people typically look at what's going on in the economy and they try to figure out how to translate that into expectations for their own business. But there are really interesting things that they need to consider when they're doing that analysis. For instance, not all companies match the business cycle of the US economy overall. So you can't just say if GDP grows 2%, I can expect my business to grow 6%, right? You
Right.
have to understand, are you leading the economy? Are you lagging the economy? A good example here is someone who builds single family homes is usually 12 months ahead of the economic cycle. Someone who builds office buildings and warehouses and things like that is 12 months behind the business cycle. So you've got to first figure out what is your lead lag relationship to the economic data before you can actually hope to leverage it to make better quality decisions.
How would somebody know that? Where could you find that information? If you didn't know it off the top of your head, how could you see that?
So obviously, ITR Economics helps companies do that, and we do that as a free service. We have a great portion of our website. It's called itreconomics.com/methodology. If you go there, you can see videos and tutorials of how you can leverage the most important part of the economy, which is your individual business data. You can look at using your sales metrics. You can look at using unit shipment or other measure of volume. Calculating rates of change, internal rates of change for your own business will allow you to figure out where in your own business cycle you are. And then you can overlay that on top of the economic data to understand what that lead lag relationship is. We've got great tools that can help you figure out exactly the timing, whether it's 2 quarters or a year or 18 months in advance. And then you can actually use that information to inform your decision making, to identify when you're heading into a low point in your business cycle. And that, by the way, means that you should be investing for the future growth of your business. CapEx investment, hiring of people, thinking about M&A type of activity, or when you're approaching a peak in your own business cycle. And that, of course, comes with the realization that I need to tighten my belt a little bit. I need to pull back on spending and make sure, that I'm not being overly aggressive right before there's a downturn in my own cycle and in the economic cycle more broadly.
Most people get that exactly wrong, don't they?
That's exactly right, Walker. I think you've got to employ this mentality of buy low, sell high, the same way that you do in the stock market. And yet most of us fall victim to that straight line projection mentality, right? When your business is doing great and you're nearing that peak in your own cycle, what do most business leaders want to do? They want to spend money. They want to invest. Right? And that's actually the absolute worst thing that you can do near the peak of the cycle. The best timing for that is at the low point. You want to leverage other people's fears and pessimism, take advantage of the low price environment and buy that equipment or bring those people on board so that they can help you ramp up as you get into that next growth cycle. That's the key.
You talked about something about how to look at your individual numbers to take a lot of the noise out. Do you mind talking about that for a moment?
Yeah, absolutely. So the key here is understanding, again, your rates of change. So most businesses, when they assess their own performance, they'll take a look at the entire calendar year. So let's look at what we did in 2019. We'll compare that to what we did in 2018. And based on the growth number, we will make important business decisions for the next 12 to 18 months, right? But the key is you've got to track that data on a much more rigorous, much more timely manner, because that rate of change that you calculated for the full year, you can calculate that every single month, and tracking it. We call that the 12-12 rate of change, by the way. It's basically comparing the last 12 months of sales, let's just say as an example, to the previous 12 months, calculating what that growth rate is, and then plotting it visually on a chart. So you can see the progression of your own business cycle over time. And
isn't it also you're measuring like June this year versus June last year and July this year versus July last year?
Yeah, you can certainly look at it on a monthly basis. But when it comes to looking at the business cycle, the best tool that we recommend is the annualized data. So the 12-12 rate of change. And again, our methodology tutorials and videos will go into much more detail. If somebody is interested in learning more about this, I highly recommend to them to go check them out on the website. It'll take you 20 minutes out of your day, but the insights that you'll gain are going to be worth millions of dollars to you. So very worth doing.
We'll have links to this in the show notes. So guys, don't worry about scrambling. We'll have this in the show notes so you can do that. So once people get a handle on their Well, how much data does somebody needs to have to be able to make decisions like that? Because there's some of these, high growth companies or companies around 2 or 3 or 4 years. Can they begin to make decisions based on cycles? Is that enough data?
I think so. I mean, it's obviously ideal to have more data history than that. We recommend at least 5 to 7 years to get some significant analysis done, because what you want is a couple of previous business cycles to look
Yes.
at to track how you will have performed relative to the economy. If you're in startup mode and you're growing your sales 200% year after year, it's going to be tougher to do that, right? But then again, you're also not really caring about the business cycle at that point. You're just having a hard time keeping up with demand, right?
Yes.
So this is really geared more towards the kind of the more established companies, I would say,
Yes.
companies that have been around for a little bit longer. But that's not to say that you have to be a big company to take advantage of this. People with sales of $5 million a year or 50 million or 500 million, it doesn't matter what industry you're in or what size of a business you are, you can employ this methodology, again, to get those great insights that will improve the quality of your decision making.
I'm gonna go off the rails here a minute. I'm gonna ask a question I don't know the answer to. How can somebody or can someone use data to decide if it's a good or a bad time to start a particular business?
They can. They absolutely can. So there are multiple layers of data. We talked a little bit about the macroeconomic perspective. You look at things like GDP, which is the gross domestic product, kind of the catch-all of economic activity in the country, or industrial production, or you look at CapEx metrics, people, business investment type of spending. You want to then take it down one level and look at the specifics of the particular industry that you're operating in. So if you're in automotive versus machine manufacturing, versus food and beverage or healthcare, I think it's really going to be critical to get down to that vertical market level.
So you go down one level. Tell me what that means.
So once you get kind of your mind wrapped around what's going on in the broader economic landscape, it really boils down to looking at your specific vertical markets, right? So if you're in automotive, or you could be in the general machinery space, or you could be in food and beverage or aerospace or, medical devices, that data is also quite important, because a lot of times some of those sectors are counter-cyclical to the economy, meaning when the economy is down, those sectors are obviously up. Other times, there will be some great technological transformation going on in those industries that causes them to behave in a very different manner than what the broader economic outlook is. But really, at the end of the day, what you need to get down to is your own data and combining all those insights. So you got the macro picture, you got what's going on in your specific markets, and then your own business cycle, which, as we already discussed, is driven by that 12-12 rate of change analysis. When you can overlay all of those things on top of each other, then you can really start to get some amazing type of insights about what is likely to happen in your business around that corner that you normally can't see around.
Right.
Because you'll have leading indicators, you'll have your own rates of change. For example, your quarterly data is a really good 6-month window into the future of your directional movement, right? So you'll know if you're ramping up or slowing down, and then you can use that information to affect everything from hiring decisions to investment in terms of machinery and equipment to planning M&A activity down the road, right? And all of these things can be connected to what's going on in the data itself. That's the critical component.
Got it. So I'm going to go macro again, because I think this is one thing that's on everybody's minds, and everybody seems to be an expert, an epidemiologist and an economist and everything else. What the hell is what's the impact of this damn virus? What's the short-term and longer-term impact of this virus on our economy?
Yeah, I think that the main notion I want to communicate to your listeners is that we believe the worst of the impact of the pandemic is behind us. It was concentrated in that second quarter period, primarily because of the shutdowns that we saw, the stay-at-home orders, and the fact that people and businesses couldn't operate as normally. It was essentially a self-induced coma, if you will, to employ a medical term here. So we've seen the green shoots of the recovery already come through. We see movement of goods starting to accelerate. We're seeing some really healthy signs from the housing market. We're seeing a lot of different leading indicators of future economic activity turn up. And we're really needing this to continue over the fourth quarter of this year and into next year to make sure that we don't have a derailment of that recovery trend. we think that that is the likeliest course of action, by the way, that the recovery continues and we really start to see some improvement in 2021. But in the more medium and longer term outlook, you've got to consider the vaccine itself. That's going to be the thing that really allows us to eventually get back to some semblance of normalcy. So when we're talking about the vaccine, there are multiple layers of complexity that we have to address. First of all is the ingredients component. How these vaccines are made really differs from one candidate to another. One vaccine, for example, uses some material from the stomach lining of a llama. Another one is made from the extract of a bark from a tree that's harvested in Peru only during the summer months.
Holy shit. How are they going to make 300 million things out of a stomach of llamas? There are enough llamas in the world.
That is exactly the point, Walker, that it's not as easy as it sounds when we're just talking about getting a vaccine approved. But let's even say we overcome those production challenges and we get the volume ramped up. There are more things to it. So for instance, when you think about the effectiveness of vaccine, some of the candidates are kind of a one and done shot where you take an injection and then a few weeks later you develop immunity. Others require 2 injections 6 months apart to develop the full ramifications of protection. So there's still so much unknown out there regarding the timeline at which we can get the vaccine, at which we can basically distribute it to the broader population, and how effective that vaccine will be. And overlaying all of that is this absolutely phenomenally interesting thing about the propensity of people to actually take the vaccine when it's available.
Right.
I just came across this survey that showed that only about a third of Americans would be willing to get inoculated from COVID-19 should there be a vaccine available. There's, the typical group of people that are anti-vaccination in general, but the larger group here are people that feel that we're rushing the process. And so they don't feel like the vaccine is going to be safe. It didn't have enough testing done. And so they're hesitant to actually take it themselves and give it to their kids. And that's a phenomenal thing. So we're predicating a lot of this stuff on having a vaccine available, but even if there is one, there's no guarantee that the largest majority of the population is even going to take it. So it's really, really important to watch these things unfold in the months to come. And I think that eventually we do get to some semblance of normalcy. But that's why our expectations of getting back to, the economy as usual is a little bit more stretched out than what a V-shaped recovery would lead you to believe.
Right. What's a place, because there's so much, the term fake news out there and so much, hype and bullshit, for lack of a better term. What's a good place that somebody could follow up with what's really happening with the vaccines and where we really are? Is there a place that you guys go that you'd recommend, or is it just come to your website and see?
Well, certainly pay attention to our coverage. We're typically putting out blog posts and opinion pieces of all sorts that talk about the latest developments. But there are multiple vaccine trackers out there, different reliable sources. So I think if you just do a quick Google search for, current state of vaccines or vaccine tracker, you'll come across several sources where you can read up more information about it and kind of see where each one is in the process. But that kind of information is going to be critical in terms of really trying to pin down the timing of when we can get past this thing really and truly.
God. So I'm going to switch gears for a minute, because everybody wonders that we can talk about macroeconomic trends and business this and business that, but everybody kind of wonders what's in it for me, right? And so if you were to, the future's uncertain, but if you could kind of lay out for us your ideas of what sectors an individual might be investing in, or what places a person should be investing in, to do as well as you can imagine in the next 10 years. What kind of recommendations would you make, Alex?
Yeah, I have several thoughts on that subject. So I definitely think that we remain committed to our belief that longer term, at least for this 10-year period that you're talking about, real estate investment should be very much a part of what you're looking at. The resiliency that we see in housing market right now is a real testament to that. We've got a full-blown recession on our hands, and yet housing sales are through the roof. We've got new construction happening all over the place. And the reality is we've got some really nice demographic trends that are going to support that. We've got millennials that are getting into their early to mid 30s now. They're getting married, they're having children at or even higher rates than the previous generations, and they want a yard for their kid and their dog to play in. So it's going to be really supportive of this trend of, single family, multifamily housing is a good area, because people, no matter what's going on in the economy, they need a place to live. And we are nowhere near the same kind of situation in the housing market as what we faced back in 2008, 2009. There is no bubble. I can guarantee you that, because if you just look at the volume of construction, it's really a lot lower today than it was in that lead up, that 2006, 2007 period that was right before the Great Recession. At that time, we were building homes at the rate of about 2 million per year. Right now, we're on a track of about 900,000, so less than half the volume of construction, right? So you've got the low interest rate environment supporting buying, low inventory levels, and generally speaking, we're very positive on the housing market in general over the next several years to come. So that's one aspect of it. If you talk about more traditional investments, we certainly think that low interest rates will keep the yields on bonds and other type of things that are guaranteed return relatively low. So you've got to start looking at the stock market, and in particular where the pockets of opportunity really lie. When you look at the performance of the stock market, it typically moves in a similar direction as the economy. It's very unusual for there to be a major disconnect. Now, it does happen, usually for very brief periods of time, but certainly, generally speaking, our expectation of a positive trend in the economy over the course of 2021 should be supportive of further some upside momentum in the stock market over that time frame. So when you look at the segments of the economy where we see opportunity, typically I would point you to things like medical devices and aerospace, because those tend to be counter-cyclical. So when the economy does poorly, those are the segments that tend to do well. But right now, obviously, with what's going on with leisure travel and even some of the pullback in elective surgeries and some of the regular doctor visits, the healthcare sector is actually hurting, outside of the COVID pandemic treatment side. So the one area where I see stability and likely some optimism is defense. I really like defense because it's separated from the broader economy. The investment in that sector is driven by congressional approval and appropriations rather than the economic cycle itself. So, the spending for the next several years is already allocated. It's already going to be there no matter what's going on in the economy. And what really makes me favor defense more than anything else is actually not the domestic side of the market, but the export side. The world around us is changing very quickly. And over the last few years, we've clearly seen this nationalism trend emerge, where people are much more inward looking. They're more about, let's figure out how to set ourselves up first and then worry about the rest of the world later. The trade war was a perfect example of that, right? So when you think about the opportunities that companies in the defense sector have to export weapons and other things associated with that, defense technology, to places like Asia Pacific, Taiwan being a great example, or the Middle East, as the US starts to retract from the rest of the world, which has certainly been the status quo under the current administration and is likely to continue. That gives a lot of impetus for those governments to invest in their own protection and their own defensive capabilities. And so to me, it just makes a lot of logical sense to try to capture some of that momentum. Now, that's not to say that those markets aren't going to come under pressure, but I do think that long-term, defense remains a really vibrant market. And if you're looking for some opportunities to invest, I think that as long as your timeline is not, the next 6 months or 12 months, then there's some really good momentum behind that trade.
Okay. Outside of Tesla, there's some good momentum is what you're telling me, right?
Tesla, don't get me started on Tesla. It's a fascinating subject. We can have a podcast just on that.
I'll bring you back for that. I want to tell you something, Alex. I've thoroughly enjoyed this conversation. I appreciate your patience with me and your sharing your insight. I know the NoBS sales team has enjoyed it and learned a bunch. So, Alex, how would somebody get in touch with you guys if they wanted? Because here's some things they'd want to get in touch with you about. You have lots of great information. You guys are awesome speakers at different events. I know you put out a lot of different things. How would somebody find you and your partners to get more information?
Yeah, thanks a lot for asking about that, Walker. So the best way is on our website, itreconomics.com. Lots of great resources and free tools on there for you to improve the quality of your decision making. We're also on the various social media platforms. So look up ITR Economics on Twitter, on LinkedIn, and Facebook. And I have a personal Twitter feed that you can follow at Chosofsky. So ACHAUSOVSKY. Certainly would welcome your followership, and we'll provide you with a lot of great insights that will help you hopefully cut through some of that noise out there, some of the crazy emotion, get down to the real data that matters, help you interpret that information, and help you make better quality decisions at the right time.
Alex, you've been a tremendously helpful, friendly, great guest, and I loved having you on the show. NoBS sales team, I hope you've enjoyed this. I've got a newsletter that goes out every week, No BS Sales Newsletter. It's got copies of, it's got a link to the podcast, link to different videos. It's got different things I'm reading lists, opinions on different things. If you want to be a part of that the newsletter, go to my website, or go to walkermckay.com/newsletter. And you'll be able to sign up and be a part of that. Also, we're taking on new clients for entrepreneurial coaching. If you are somebody who's running a business and you know that sales is vital to your future, and you think if you really got it right, you could make another $100,000 in the next 6 months or so, it's probably a good time for us to talk. 803-917-2817 or walker@walkermckay.com. Alex, thank you so much for being with us today on the show. I really appreciate you. Look forward to having you back to talk about Tesla.
Awesome, Walker. Look forward to it as well. Take care.
Thanks. Bye.